Thanks for joining Farm Business Consulting's Wednesday Winter Webinar Series, first of 2012-2013 winter. And what we're going to be discussing today is the StatsCan December 5th yields report that came out this morning. There's a few surprises, not really. There's a few things we'll get into that I think was a little bit of a surprise in my books, but the trade is reacting positive so far this morning. We'll see if it continues through the next 5 hours of trade here. But right now we'll finish off the presentation with what's happening in the market so far in the first half hour of trade. So before we okay, what is going on? Before we get into what this report came out at, we've got to get into, of course, what the October report was showing us and setting us up for the last 2 months of trade. Basically, we had the October report came out, and they were predicting that there was going to be 13.3 million metric ton of canola, and this stems all the way back from in June. That's quite interesting, Jay. In June, they were predicting anywhere from 15.5 to 16.3 million metric ton. So that really set the tone for the markets going forward in October. And what that did is the trade really bumped up what they had thought was going to be a lower estimated yield, what they thought was going to happen, and they really bumped that up in the futures as we saw through the last few months of trade here. Another interesting number that we're going to look into a bit here today is the barley number. They had last year's barley number at 7.7 total production, and they were estimating 8.5. If you remember back in my video that I did, my short little video, you can always go into the archive section of the website and look at it. I said that this number wasn't going to hold 8.5 because I'd already seen by that time extremely lower barley yields just in my group. So that basically came true going forward, as we'll see in the next report here. So, into the actual report that was released this morning at 6:30 in the morning. Of course, a few things that I just want to highlight is obviously these two arrows here are highlighting certain things. But first off, with the canola, remember it was 13.5 or 13.379, so it was a little bit lower. But from what I'm reading in other market analysts and traders' thoughts so far this morning, they feel it's closer to probably 13 million metric ton. So they're still not really believing this report. And I would presume too, as you remember back in the October video that I did, I figured it would be closer to 12.8, just taking my group's yields and extrapolating that across Western Canada. But what we saw is a big reduction. Another interesting note is we saw a little bit of an increase in this number here, which will affect the supply-demand table. As we noticed, it went up a little bit from 7.7 to 7.8 on barley as well. But this barley number dropped basically. This number here went down right around 500,000 metric ton, which is going to extremely impact the feed barley situation. Most of the maltsters have enough accepted that they're covered off for the remainder of this year. But in order to have the farmers grow more, they're going to have to actually try to get a little bit more. They're going to have to get a little bit more aggressive in their pricing for next fall in order to entice farmers to seed a little bit more. I'm not ignoring wheat. Wheat is basically what they had expected. It's about 200,000 metric ton higher than what the trade had expected. USDA had us at 27 million metric ton for the last 4 months. So obviously USDA has a pretty good grasp as to what's going on with Canadian wheat. We'll see here, though, that the biggest change in numbers came from the October report was actually in durum wheat. Their yields went up. Spring wheat was only 100,000 metric ton higher, so it's not like there's that much more spring wheat around than there was predicted back in October 4th report. Another number that it definitely stands out is the pea number. This is going to keep pea prices buoyant, probably that $9 to $10 range for yellows, and 10 to 10.50 for greens going forward. And that's going to be a pretty bullish number, I feel, and I'm really enticing guys, trying to entice guys to grow some peas, get back into it for more benefits than just obviously these prices here. It's the nitrogen savings, future savings in the next couple of years after you grow peas. So the oat number was really another number that probably the trade didn't think was going to impact it that much. Sorry about that. So this oat number, we saw a drop off from year to year, basically 500 million metric ton in here. And of course, as commodity prices get higher, then fewer farmers are growing oats in Saskatchewan, because it is basically about the least amount of dollars per acre that you can get in value for your land. So going forward into winter planning for seeding, I'm anticipating that oat number is going to drop even more. I'm anticipating peas are even going to drop more. That's why it might be a good year to get into it, because guys are just maybe looking at more going into a feed barley or more wheat. In this report, the StatsCan did predict that there was going to be, probably with these higher prices and an open market on wheat, there was going to be more wheat planted going forward. They just hinted about it a little bit, but you know, it's one of those things. I don't know if it's going to happen. I know in my group, I think it's probably going to be about the same, but I'll be doing a webinar on that probably in about February or March of next year, just as to where the seeded acres and how that's going to, you know, impact us going forward for marketing. So conclusion part, basically canola, the trade in the last 2 days had dropped canola down about minus $7 per ton. And this morning, once we show you the futures, you'll see it's up that much, as they were scared that the report might come out at maybe 14 million metric ton. But the 13.3 that they're going to be working off now going forward is basically confirmation that we are in a tight supply-demand situation. One thing I do want to point out before I get on to the conclusion part, I forgot about. If you were to take this 13.3 million metric ton, basically the crush is looking at about 8.2 this year. So that only gives us 5.1 for export. And why that's important is, from what I hear is already on the books for exports, is already about 3.5 million metric ton on the books. As you know, any of you watching this video, we're already committed. So we would be already in this 3.5 million metric ton. So that basically only leaves about 1.6 million metric ton that is out there basically for to be, you know, either committed to more crush if the canola acres are down, or for more export sales. So what that's going to be is, it's going to be strong basis levels from now till July, most likely. And we're also going to see probably some strong basis levels for fall of 2013, simply because the trade is going to try and entice farmers, instead of maybe moving some acres into spring wheat or CPS, they're going to be trying to entice guys to keep it into canola, because there's a lot of disappointing canola yields, which I don't have to tell you much about, because everybody experienced that this year. So basically, the last conclusion on canola, it's going to remain bullish, basically until we get some directions from South American soybeans, whether it be the planted acres, and then once we get into mid to late February, their weather going forward, and then that'll also lead us into the March report for the U.S. Seeded acres, projected seeded acre. So we're going to be pretty bullish. Again, that's why I wanted May contracts on canola, so that we have till end of April to price it, so we can ride these highs and lows. Basically, I would think that we'd be looking at probably about the throwing in some targets for 620 to the 650 range for the futures. Of course, we've got to crest the $600 range first before we even start looking at entertaining some of these targets. So that's what I'm looking at going forward. For wheat, it's basically neutral for the 1 and 2, bullish for any low grades, which will go into the feed market, which would be CPS, and a low grade 3. Again, that's why I've kind of been holding off on some of this wheat, because some of the offers we have that is maybe only 3 red, 14 protein, we might be better off just taking a feed price equal to $8.25 if we could find that FOB farm, because basically that'd be looking at about $8.50 a bushel back to your bin. So again, that's what we'd be looking for the lower grades of wheat. CPS, I mean, it's the same scenario. It'd be the same pricing going forward. So I've already had CPS picked up at $8 FOB farm, so I believe $8.25 isn't a stretch now as we go forward, because these two numbers are going to be a little bit sluggish. I'm going to be looking at targeting probably about 9.25 for number 1. Current price is basically about $8.70 a bushel, so it's a little bit aggressive, but there's been very little farmer selling because they've made money off of canola, barley, and peas, which those of you that grow that in my group know that we've already sold all that stuff and moved most of it. Some of the malt is a little bit slower, but we're getting into moving it, so cash flow isn't a problem. So wheat will be the next one where there'll be some spot prices, I believe, in the 9 to 9.25 range. Okay, and barley, like I said, going forward, aggressively pricing some fall of 2013 for around that 625 to 650 with an act of God. So that's what I'd be looking at doing some for there. For feed barley left in the bins, I'm looking at targeting this price right here, $5.75 to $6. What this does is basically convince Lethbridge that there isn't much barley out there, and they're going to have to pay to get it. Of course, this $6 is only going to happen when we have road bans, so that's why I have that in there. For some of you that are patient and want to wait to move it during the road ban season, I think the best way of doing it would be looking at doing some targets for that time frame, so that they could cover off sales. Peas again, slightly bullish. I guess there's my spelling error. It's right in line with the trade thoughts and why the price has maintained basically the $9 plus going forward since harvest. Again, most of the peas are marketed in my group, so this isn't a big concern. But what this will do is to entice peas to be seeded. I think we're going to see some pretty attractive 2013 pricing for the fall, and it's going to be up around this $8.50 to $10 range depending on variety. So a lot has changed in that market over the last couple of years, which has kept this price buoyant, and I doubt it'll be dropping down to $5.50 to $6 anytime soon. So of course that's it for the presentation part. like I said, I'm going to show you just what the futures are doing here this morning. Like I said, we're basically got back to $7 a ton that we gave away early part of this week, as the trade now has confirmation that the price is back in line, or the total production is back in line and exactly what they thought it was going to be since October. Nice interesting fact, we've got beans that bounce off about $1 a bushel from their low. So that's going to be important going forward. Once canola breaks this $600 per ton range, that's where I said that's where we should look at doing targets for to pick off the highs for 615 to 650, depending on how aggressive you want to be. But again, we have till April 24th on most of those basis contracts to be able to price that. So any target we can put in, we could do, you know, half at this level to 620, and then maybe the other half a little bit higher. So that's what we would be looking at going forward. Okay, let me just switch pens here. Okay, like I said before, I've had to mute a few of you because I was getting some pretty heavy echo. Now it's time for questions. I don't want to keep everybody too long because it's not really that big of a report, you know, in the world's thoughts. So there's going to be bigger ones coming going forward in January that'll, I think, impact the market way more than what this is. So so I'll just unmute everybody, and if you want to ask a question verbally, great. If you don't, you just ask it down in the question box down in here. Type it in, or you can text it to me. I did have one question text to me here, and it was basically I covered it probably right at the end. My thoughts of when we might be looking at marketing the wheat. Again, let me just bring up this PowerPoint. When we get into the wheat, I think we'd be looking at probably doing it around this, putting in targets for around that February range, but giving them to March, the end of March, to move it. And if they need it in January, they can. The grain companies have made sales, so the sales have been made to exporters, but they haven't bought it yet. They haven't replaced it. That's nice writing there. But basically, so now let's say the Viterras, they've made the sales over to the exporters, but they now need to buy it from the farmers. So it's kind of a waiting game. That they're looking at targets and what guys are looking for a price, because they can, again, take in any of their here, I'll just show you for a second here. They can drop their basis to trigger whatever price they feel they need, but they're only going to trigger what they think they need to buy this stuff. So, oh, come on. I just want to show you quickly. I'll use Crossfield's prices here. And basically, I just want to show you what the basis levels are running at on wheat. So you see here, Viterra basically for that February time frame has a minus 41. They've also had prices in, or sorry, that's soft wheat. Minus 29. I thought that looked a little bit strange. They have a minus 29, but I bet you dollars to donuts they could drop down to about a minus 15, because I know what they've sold this stuff for at Vancouver. They could go to a minus 15, potentially even a minus 10 in order to trigger some of this. Why that's important, $15 a ton, you're basically looking at about a plus 40 cents per bushel. So, of course, when I say it, the price is $8.70 right now, my target of $9.25 isn't crazy if you were to add 40 cents to this price. we're getting pretty close. So all we need is Minneapolis futures. Another fact of wheat marketing, I don't like that everybody's using Minneapolis futures because the world doesn't use Minneapolis futures. They're only using Minneapolis futures to trade because it's liquid. So that doesn't necessarily mean that the world is looking at a Vancouver price of 342 minus, say, $29 a ton. So when it comes down to answering your question, sorry, my long-windedness, we would be looking at pricing this stuff, putting in targets probably once wheat starts rallying here going forward. As you see, wheat's up about 2 cents a bushel right now today. But once wheat gets back into, right now it's at $9.32 a bushel. Once it gets back into about this $9.50 per bushel or higher, that's where I'll start looking at putting in targets, because it'll bring that price a lot closer, like I said, bring it closer to that 925 range that I want. And whether they want the grain or not, they're going to have to trigger the targets. I really feel going forward that we can get that $9 range anytime in the spring that we want it, especially with future reports coming out. So we're not really risking anything. And this just goes to show you why the wheat board basically has always taken so long to move wheat, because Canada's wheat really doesn't move until February to July, even August. As you know, when you're delivering the last of your grain in June or July to the grain companies, they're still shipping out wheat. So again, that's when our wheat's going to move. So that's when we're going to put the targets in for when they want it. And that's the story on wheat. So, so is there any other questions? Like I said, down in the chat box, you can just type in your question down in here, or you can text it to me. That's all I've got so far for questions. So if that's all I've got, you're going to be able to, if I went a little bit faster over some stuff on the website, it'll be loaded up here within the next hour or two under the webinar section, and you can watch it again. It's only going to be about a 20-25 minute presentation. So thanks again for everybody that joined this and everybody who's watching it at their own convenience. And the next report I'm going to have is 2 weeks from now. And it's going to entail, I'm pretty sure it's going to entail, I like to switch it around, but it's going to be our yields going forward, and, why they were maybe lower than what we anticipated, but just my yields as a group, just so that you know that you weren't the only ones that maybe had some crazy yield numbers on the low end. So thanks for joining, and we'll see you again in a couple weeks.